the UK has voted to leave the European Union, but there is still great uncertainty as to how or even when Brexit will take place. To help me discuss the economic implications of Brexit on the UK, Europe and the whole of the world economy, I'm joined by James Pomeroy, who is a global economist at HSBC. James, thank you for joining me.
Thank you, pleasure.
So how pessimistic are you, or maybe optimistic are you about this?
Well, for the UK, we can pretty much get a guess of where growth is going to go next year, and we've revised down our growth forecasts. We're now looking at 0.7% growth next year instead of 2.1%, so that's quite a big downgrade. Most of that downgrade is coming through investment being delayed, some weaker exports and these sorts of channels. It's really just a confidence hit. If you're a business and you don't know the trading relationships the UK is going to have in 2-3 years' time, why would you be investing right now? And that's where we're going to see the channels. We think investment slows into the end of this year and into next year. Obviously, trade's going to be affected by distorting trade relationships with your biggest trading partner. So we're reasonably pessimistic on the UK. What that means is, the Bank of England is going to struggle to raise rates anytime soon. Inflation's likely to be higher with a weaker pound, and that's not a really encouraging economic backdrop. It's
not an encouraging backdrop at all for the UK. What about Europe?
So in Europe, the sort of transmission of that slower growth is slightly different. I mean, the UK is an important trading partner for much of Europe. For many countries, it's one of the biggest individual export markets. So weaker growth in the UK will probably translate into weaker growth in Europe. And estimates seem to suggest about a sort of 0.2, 0.3 percentage point lower growth rate if we just take that sort of calculation straight across. There is some risk of contagion, partly political. If we were to see a continued rise of populist parties across Europe, if this was also to hamper any form of sort of expectations or investment intentions there, that could also hurt growth, as well as the sort of financial market transmission mechanisms, the sort of volatility that we've seen over the last couple of days. If that is to continue, that also could derail a very fragile European recovery. So there's a lot of ways this could feed across, but getting a magnitude on that is pretty difficult right now.
So there is still a lot of uncertainty, as we are just saying. But one thing that is definitely certain is that the pound keeps on going down. And this will end up hurting other economies even outside of Europe.
Well, exactly. So our forecast is for the pound to keep going down a little way from here. But actually it does affect a lot of different countries. We've seen FX volatility spike all across the world over the last couple of days. Stronger yen, stronger dollar, these hurt these economies. It means inflation is likely to be lower. It means the central bank's going to have to react slightly differently. We think the Bank of Japan's going to have to ease again. We think the Fed is going to struggle to raise rates more than once this year and more than once next year. And that's even if financial market volatility does calm down, and there's no guarantees that that happens. We just don't know. So it's really just volatility and uncertainty, and that's where you feel this real pain on the rest of the world. It may only be the UK, which is a reasonably small economy in a global scale, but that volatility sends shockwaves. And if a sort of slowdown in growth in the UK, one event in the UK can derail the Federal Reserve's tightening plans and affect the Bank of Japan, that says how big an event this is.
And let's not forget markets that are traditional commodities exporters, such as the ones in Latin America. We're just now trying to get some kind of relief from the end of the commodity boom, and they're going to be hit by a stronger dollar.
Well, exactly. So you've got markets in much of Latin America who have had a really awful last couple of years. We've had long way below par growth in most countries. We've seen recessions in Brazil, got weak growth in Mexico. And these countries, finally, commodity prices were turning around, the oil price was going up, the currencies had stopped weakening, and they were getting some relief, and we were seeing expectations of rate rises coming off, maybe some even talk of rate cuts. Maybe then these economies can recover. And now they've been hit by another shock. And it's a risk-off event, and that means it's not going to be great for commodity prices, it's not going to be great for emerging market currencies, and a stronger dollar. All of those things together don't really bode well for these economies, just as they were sort of turning a corner. And that is, to be honest, quite a negative thing for Latin America.
So no really good news for the time being, and the only thing that we do know is that there will continue to be quite a lot of uncertainty all over the world.
Yeah, pretty much. It's going to be one of those situations where the more news and the more facts we can get, then we can get an idea of what the world's trading relationships are going to be over the next few years. Maybe businesses can start to become a bit more confident. We may see a pickup in investment, but for now, uncertainty hurts, and it's something that is likely to mean slower growth across the world.
Thank you, James.
Thank you.